Okay, picture this. A company sees its stock just absolutely tank, drops nearly 30% after a really rough earnings report. But then you hear its leadership, and they sound incredibly bullish, really optimistic about what's next. It's quite the contradiction, right?
It really is. And that's exactly the puzzle we're diving into today with BigBear.ai. We're going to try and cut through that noise, look at their latest numbers, the Q2 2025 earnings, check out what analysts are saying, and, their strategic moves.
Right. The goal here is to sort of unpack these two seemingly opposite messages, the short-term pain versus the long-term plan, hopefully give you a clearer picture of where BigBear.ai actually stands and maybe where it's headed.
Okay, so let's start with the basics. Who is BigBear.ai? Well, they describe themselves as a leader in AI specifically for decision intelligence. They provide mission-ready AI solutions and services.
Mission ready. Okay. And their main focus areas.
Heavy hitters, really.
Mhm.
National security, defense, critical infrastructure. They're based just outside D.C. in McLean, Virginia, and you can find them on the NYSE ticker BBAI.
Got it. And it sounds like they operate in some pretty sensitive areas.
Absolutely. I mean, look at their key industries. Homeland and border security, they talk about decades of expertise
Yeah.
helping agencies there. Then in defense, their AI is doing things like optimizing supply chains, improving situational awareness, even managing autonomous systems. It's about making operations more efficient.
And it's not just defense, is it?
No, not at all. They're deep into the intelligence community, too, providing AI, advanced analytics, full stack development for real-time intel, predictive capabilities.
Okay.
And they cross over into the private sector, manufacturing, supply chain, helping companies boost efficiency, cut costs, plus travel and trade. I mean, customs, transportation agencies. They're using AI like facial recognition, threat detection to enhance security there.
So the core of it all is this decision intelligence. What does that actually mean in terms of their tech?
Right, so they basically built this suite of AI tools for making better decisions. They break it down into three main products. First is Observe. That's about pulling in all the data, cleaning it up, the foundational stuff.
Makes sense. Data ingestion.
Exactly. Then there's Orient. This is where the machine learning happens, and it's designed to scale up or down as needed, adapt to what's happening.
Okay, the analysis part.
Precisely. And finally, Dominate. This takes all that analysis and presents it visually with predictive analytics. It's designed to show you what might happen and suggest what to do.
Observe, orient, dominate. Sounds very action-oriented.
It is. It's meant to be an end-to-end suite for making sense of complex situations and acting decisively.
And what do they see as their edge? Why them?
They really emphasize two things: deep experience, especially with tricky, high-stakes government needs, and second, an adaptable, all-in-one platform that's built specifically for, real-world operations, not just lab experiments. That combo, they believe, sets them apart.
Okay, so that's the high-level view. Let's talk specifics. What does this look like in action? Any standout examples?
Yeah, they have some interesting ones. Take TrueFace, their facial recognition system. They claim it can do one-to-one or one-to-many matches in under 2 milliseconds.
2 milliseconds. That's
Yeah.
incredibly fast. Faster than blinking, literally.
Exactly. That kind of speed could genuinely revolutionize security protocols in a lot of areas. Think critical infrastructure, public safety, not just, typical defense stuff.
And are they actually deploying this kind of tech?
Yes. Look at Veriscan. That's their system for passenger processing at airports. It uses facial recognition to authenticate travelers more smoothly.
Ah, okay.
It's already running at Nashville International Airport, and they're expanding it to others.
Yeah.
The idea is to move thousands of people per hour, securely and efficiently.
So that shows them moving beyond just pure defense into broader infrastructure.
Right. It's a strategic move.
Hmm.
They're also integrating their Pangiam threat detection tech with Smith's detection screening equipment for aviation security. And their Conductor OS platform is used in complex military exercises like Talisman Sabre and even for managing Army drone swarms.
Drone swarms, okay.
And they also mentioned something called Shipyard AI, another piece of their tech puzzle.
And clearly they've made inroads with the government. Big contracts, right?
Definitely. They've landed contracts with major players, the DoD, the NSA, the U.S. Air Force. This is important because, as they stress, these aren't just pilot programs or science projects. They're embedded in critical operational systems.
Right. These are real adoptions, not just potential uses.
Precisely. Getting those kinds of contracts, especially with sensitive agencies, says a lot about the trust in their technology and its perceived importance. It suggests it's becoming operationally necessary for some functions.
Okay, but that brings us back to the elephant in the room, the financials. That stock plunged nearly 30% after the Q2 2025 report. What happened there?
Yeah, the market reacted strongly, and for understandable reasons based on the numbers. Q2 revenue was $32.5 million. That's down 18% from the same quarter last year, which was $39.8 million. And maybe more importantly, it missed analyst estimates by over 20%. Wall Street was expecting something closer to $40.6 million.
Ouch. A significant miss. What was the reason management gave for that drop?
They pointed mainly to lower volume on some key U.S. Army programs. They said there were disruptions because the Army is modernizing its data architecture tied to some federal efficiency drives.
Okay, so that immediately flags a risk, doesn't it? Their dependence on specific government programs.
Absolutely. It shows how vulnerable they can be to delays or shifts within those contracts.
And then there was the net loss figure. It was astronomical.
It really was. $228.6 million net loss in Q2. Compared to $14.4 million loss the year before, that's a jump of what, almost 1,500%.
How does a loss explode like that? What drove it?
Well, a huge chunk of it wasn't operational cash burn, but non-cash accounting items. The biggest piece was $135.8 million related to derivative liabilities. Plus, there was a $70.6 million non-cash goodwill impairment charge.
Goodwill impairment, meaning they had to write down the value of companies they acquired previously.
Essentially, yes, it's an accounting adjustment reflecting a reevaluation of those assets' future value. So while it impacts the net loss heavily, it's not cash flowing out the door in the same way.
Okay, but even looking beyond those big non-cash items, their adjusted EBITDA was still negative, right? And worse than last year.
Correct. It came in at negative $8.5 million compared to $23.7 million in Q2 2024. That worsening was driven by a couple things. Lower gross margin, it dipped from about 27.8% to 25.0%, and also increased spending on R&D. They're still investing.
And the adjusted loss per share?
71 cents per share. That was way off from the $1.16 loss per share analysts were expecting. So a miss across the board on profitability metrics, too.
So operationally, Q2 looks pretty bleak. Lower revenue, wider losses. But, and this is the core paradox we started with, the balance sheet tells a completely different story.
This is the fascinating part. Despite all those challenging operational numbers, BigBear.ai reported a record cash balance, $390.8 million as of June 30th, 2025.
Record cash, how much did they have before?
It's a massive jump. They ended December 2024 with around $50 million. So going from $50 million to nearly $391 million in 6 months is transformative.
Transformative is the right word. Where did all that cash come from? Fundraising?
Primarily, yes. And this is the key insight, I think. This cash injection fundamentally changes the narrative. They've shifted from being perhaps a tech firm struggling with losses to suddenly being a very well-funded player with strategic options.
So does this mean they're net cash positive now, more cash than debt?
For the first time ever, yes. They have almost $250 million in net cash. That's the $391 million cash minus about $113 million in debt.
Okay.
And they also mentioned a backlog of $380 million in future contracted work, which provides some visibility.
And the debt itself, did they manage that?
They did. Even back in Q1 2025, they reduced debt from around $200 million down to $142 million, mostly by converting some of it to equity. So much more financial flexibility now.
Okay, this combination, operational losses, but a huge pile of cash, must make valuing the company pretty interesting, right? What are the valuation metrics saying?
They are definitely on the high side. Their current price-to-sales ratio is about 11.55x. Compare that to peers like C3.ai at around 5.3x, or a traditional defense contractor like KBR at under 1x. It clearly suggests the market is baking in a lot of future growth.
11.5 times sales is steep.
It is. And their enterprise value to sales multiple is also around 11.1x, which analysts call lofty compared to its own 5-year average of about 3.9x and the market average of 4.6x.
So there's a real disconnect there between the current financial performance and the valuation. The market seems to be betting heavily on the future potential, fueled by that cash.
Exactly. It implies there's a high bar for them to execute and deliver on that growth potential.
All right, so that brings us to the growth story. Q2 was tough. But they have this war chest. How is leadership spinning this? How do they justify the optimism?
That cash is central to their argument. The CEO, Kevin McAleenan, was very direct. He said, quote, BigBear.ai is going on offense.
Going on offense, okay.
He explicitly stated that this strong balance sheet isn't just for stability, it enables significant transformational investments. He clearly sees this cash infusion as a chance to change the game for them.
Transformational investments Sounds ambitious. What specifically are they targeting?
Well, Michelin tied their recent fundraising directly to something he enthusiastically called the One Big Beautiful Bill, or OBBB.
OBBB, what's that?
It's not an official name, obviously, but it refers to a massive new legislative package. We're talking huge numbers. Over $170 billion in supplemental funding for the Department of Homeland Security, plus another $150 billion for the Department of Defense.
Wow. That's enormous potential funding. Is it relevant to Big Bear's niche?
Highly relevant. A lot of this money is specifically earmarked for developing and deploying disruptive defense technology. That lines up perfectly with how Big Bear positions itself a mission-ready AI company with a national and border security focus.
Any specific areas mentioned?
Yes. Glenn particularly highlighted a big increased focus on border security and biometrics. He cited over $70 billion in increased supplemental funding just for Customs and Border Protection, CBP, over 4 years. That's right in their sweet spot with tech like TrueFace and Veriscan.
Okay, so potentially a massive tailwind from U.S. government spending. Are they looking internationally too?
They are. They've announced what they call a transformative partnership in the UAE with companies under the IHG umbrella group. The goal is accelerating AI development there. This also seems linked to broader discussions about a potential $1.4 trillion joint AI investment initiative between the U.S. and the UAE. So, big picture stuff.
And elsewhere?
Yes. They've also partnered in Panama with a company called Narval Holding Corp. They're rolling out a new cargo security management solution there. It uses AI, biometric verification, real-time monitoring, aimed at tackling illicit trafficking and supply chain issues. And they have plans to expand that regionally, even globally.
Okay, interesting diversification. Now, there was another partnership that seems different. The one with the Washington Commanders NFL team, naming rights for their training facility.
Yeah, that one definitely stands out from their usual government focus. The facility is now the BigBear.ai Performance Center. They're the first AI firm with NFL naming rights like this.
What's the strategy there? Just brand awareness.
It seems like a very calculated move, actually. It's about broadening their image, reaching a huge national audience, 60 million NFL fans, and softening that perception of being only a government defense contractor.
Trying to go more mainstream.
Possibly. And there might be more to it than just branding. They hinted at using AI for fan experiences, maybe predictive analytics for planning events, or personalized interactions inside the stadium.
Ah, so potential new revenue streams too. Licensing their tech.
Could be tech licensing, data monetization. It opens up possibilities beyond the traditional government contract model. A significant potential pivot.
So wrapping up their growth strategy, it sounds like accelerate organic growth, pursue these key partnerships, government, international, even sports, bring in talent, keep innovating, and really lean into their leadership in security, travel, and trade.
That sums it up. And this forward-looking view seems to be influencing some analysts. Despite the Q2 results, predictions show sales potentially hitting $170 million in 2025. That's up 8% from 2024 estimates, and maybe $192 million in 2026, up another 13%.
And profitability.
There's even some optimism there, with analysts seeing potential for EBITDA to turn positive in 2026. So the long-term story is still seen as potentially strong by some, which helps explain that high valuation we talked about.
Okay, we've covered the potential upside, the big plans fueled by cash. But we absolutely have to balance this with the risks and red flags. Every growth story has hurdles.
Absolutely critical. And the biggest one, arguably, is that dependence on government contracts, especially U.S. defense and intelligence. We saw exactly how vulnerable that makes them in Q2 with the Army program disruptions, contract delays, budget cuts, shifting priorities. These are major demonstrated risks for them.
It's not theoretical, it already happened. And what about getting to profitability? That operating margin you mentioned, negative 254%, that's deeply negative.
It is. The path to break even requires not just substantial sales growth, which depends on winning those contracts, but also really tight cost control. That's a big if right now.
Are there specific concerns about why they're losing so much money beyond just R&D and growth spending?
There are worries about what some call structural losses. These could be ongoing costs related to those derivatives or debt that might persist and keep actual profits elusive even if revenue grows. And remember, management actually withdrew their full year 2025 adjusted EBITDA guidance. They cited the continued uncertainty around the Army programs and the impact of their new growth investments. Pulling guidance is rarely a sign of confidence.
Right, that signals significant internal uncertainty. Then there's the valuation issue again and the stock's volatility.
Yeah, the stock surged over 350% in the past year, leading up to August 2025. Some reports strongly suggest that was driven more by the general hype around AI stocks than by Big Bear's specific fundamentals at the time.
So potentially overvalued based on current performance.
Many would argue yes, that $1.85 billion market cap seemed inflated relative to their revenue and earnings, and that 11x ED sales multiple is seen as sky high. It leaves almost no room for error. If revenue disappoints again or profits don't materialize soon, the stock could be punished severely.
And it's a volatile stock anyway.
Extremely. It has a beta of 3.75. That means it's historically much more volatile than the overall market. Big swings are part of the deal here.
What about short sellers? Are people betting against the stock?
Yes, significantly. The short interest is around 20% of the float. That means a substantial portion of investors are actively betting the price will go down, reflecting high skepticism.
And the Q1 issues, you mentioned procurement delays then too.
Right. Even before Q2, Q1 showed federal procurement delays causing revenue variability and pushing up administrative costs, widening their adjusted EBITDA loss. And those non-cash expenses, like stock compensation and derivative adjustments, were also hitting the bottom line then.
How does this compare to, say, Palantir? They're often mentioned as a peer.
It's an interesting comparison. Palantir is larger, more diversified across clients. Crucially, they have a much stronger balance sheet, reportedly $5.4 billion in cash, no debt, and they've achieved consistent GAAP profitability. That gives them a lot more resilience against the kind of contract disruptions that hit BigBear.ai.
Okay, so weighing the potential growth against these significant risks, what are the Wall Street analysts saying overall? What's the consensus rating?
Well, it's important to remember this data is mostly from before the latest Q2 shock, but leading into that, the consensus among the 4 analysts covering them was a moderate buy.
Moderate buy. How did that break down?
It was split. 2 analysts had it as a hold, and 2 had it as a buy. The average price target over the next 12 months was $6. At the time, that implied about an 18% upside from its price then.
Okay, an 18% upside isn't huge, especially for a volatile tech stock, and that was before the bad Q2 news.
Exactly. Sources like MarketBeat and TipRanks made a point of saying those estimates and ratings were very likely to change once analysts factored in the Q2 results and the withdrawn guidance.
Did we see any analyst moves even before Q2 that indicated caution?
Yes, there were some signs. In August, H.C. Wainwright kept a buy rating, but lowered their price target to $8. Back in March, Northland Capital Markets actually downgraded from strong buy to hold. Cantor Fitzgerald kept an overweight, but lowered their target to $6. And Northland Securities downgraded from outperform to market perform with a $4 target. So sentiment was already becoming more cautious.
How does BigBear.ai compare to the broader tech sector in analysts' ratings?
Generally, analysts seem less bullish on BigBear.ai compared to other computer and technology companies. Its consensus rating score was 2.50, slightly below the sector average of 2.65, and that predicted upside of 18% was way lower than the average predicted upside for the sector, which was over 60%.
So even before Q2, analysts saw potential but were more cautious than with the average tech company. What's the bottom line investment verdict then?
It gets consistently framed as a high volatility play. It's a bet on AI adoption in government and critical sectors. The advice is generally to balance the potential wins, new contracts, sector leadership against those very real risks. The contract delays, the path to profitability, the extreme stock price swings. Several sources basically say you need a speculative appetite for this one, and its true value proposition might take another 12 to 18 months to really become clear.
So let's tie this all together. BigBear.ai is really at this fascinating, almost contradictory crossroads, isn't it? They're facing these immediate, very real operational hurdles. I mean, those Q2 numbers were undeniably tough.
Absolutely, no getting around the Q2 pain.
Yeah.
But in the very same breath, they're suddenly sitting on this huge pile of cash, almost like a war chest. And they see these potentially massive tailwinds coming, that huge government funding bill, the OBB, their international deals. Their leadership clearly believes this cash allows them to power through the current issues and capture major growth, especially that national security AI space.
It really does set up this classic dynamic for you, the listener, to watch. A company navigating significant short-term turbulence while making big strategic bets on long-term gain, all made possible by that sudden cash influx. It'll be fascinating to see how it plays out.
Definitely. And here's maybe a final thought to leave you with. BigBear.ai puts so much emphasis on being this provider of mission-ready AI, specifically for national and border security. They're banking on huge government investments like that, one big, beautiful bill. Think beyond just Big Bear's stock price for a moment. If they, and companies like them, actually execute well on this vision, how could this kind of focused, heavily funded push into AI fundamentally change our national defense strategies? How might it reshape how governments operate day to day? What does that imply for our future security, our governance? It's something pretty significant to ponder.